Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn Associates with your agriculture update. And this is your weekend edition, and this is for Friday, the 25th of January, 2019 at 4 p.m. Central Standard Time. Now remember, on the weekend edition, what I do is I start first with the monthly chart, and then everything else is a weekly chart. The event of the day, obviously, President Trump conceding and going into a 3-week stopgap period where the government reopens, people get their paychecks. I think missing 2 paychecks just simply was too much for him and anyone else in politics, thank God. We saw LaGuardia Airport shut down for a brief while as people were calling in sick. They're not getting paid. I can go on and on. As for the agriculture market, well, beans were up today 9 cents and corn was up. You know, the Chinese delegation is coming to America this week, and we'll find out what's going on. I don't think trade is the big issue we're having. I think the big issue is intellectual property. For you in agriculture, though, the good news is the USDA is going to be open. We're going to start getting your data. You'll be able to make decisions. And yes, you know your farm offices were going to be open anyways, and here it comes with the government, at least for 3 weeks, reopening everything. The monthly area chart of closes is saying this rally could come back up to the resistance point of the 18-month moving average of closes at 941. The pattern when you go to a Fibonacci chart, if you go from 1071, and that's the high made back in March, all the way to this break low of 810.5 this past July, we've had a rally so far that's carried into the 38% area. The 50% zone is right here at the 940 level, and if you could really stretch it out into the mid 970s, you'd have the 62% retracement. But so far, those that watch Fibonacci counts are still going to say this market is a bounce in a market that hasn't really come alive. When you come to the weekly charts, it's a very different story. It looks pretty bullish right here. You've got higher lows. You have higher highs. You consolidated a little bit here, and you're trying to move back to the upside. As the market's moving and you look at moving averages, the 100-week moving average, which offers some resistance, well, that ties in with that 940 number we were just looking at 945 3/4. And what's starting to happen now is we're starting to get where the 18-week moving average of closes, which is this red line, it's at 885, but when we reopen Monday, it's going to get another value. And this market is moving at about a nickel a time, so it should be right up to that 890, the last break area, offering another support zone. First resistance, well, if you look at these black dashed lines, they've done you a pretty good job of warning that when you get up to the upper Bollinger Band, the market's been having a resistance problem. And that began back, if you think about it, in November, and it's held on through then. We're again getting up there. 931.5 is that resistance number, all the way to the 100-day average of 945 3/4 in those Fibonacci counts. So we're getting to an area that should get very, very interesting. And of course, with everything reopening in the government, that gets to be even more fun. Momentum in the market still pointing up. So we've got bias up since we're over the 18-week average. The trend is up. We're narrowing into a resistance zone now of 931.5 to 945 3/4. What's missing in the market is meal. The oil meal spread's gone the other way, where oil is jumping all over meal due to a shortage and a big crop demand for palm oil, canola, and other parts. So this market is just going sideways. Guess what? Out of sideways action, trends develop. That's what, think of it as a pipe, the black lines, and you've got a spring winding in it. The market is in an uptrend. It's got higher lows, higher highs. I know it doesn't feel that way on the daily charts. The weekly's still there unless you get back under last week's low, and that low was 306.90. Get under that, and what happens is you could develop lower highs, lower lows for a challenge of the lower band. My bigger dilemma is it looks easier for the market to pop to the upside than downside as momentum is up, bias is up, resistance here, We'll see if the market does anything. If it does, where could it go? Possibly 326 and a quarter. If you break down, 303 and a half. Not saying it can't exceed those numbers, but those are the logical ones in front of me. In the oil, you've been going sideways. Look at the black lines, the Bollinger Bands, and now you're trying to push out the top band. That's how you try to break out and develop a trend. If it can do that and succeed with it, momentum is up. Remember, on the weekly charts, we don't look at overbought, oversold. So with momentum up, if you keep going, the next number on the chart is the 31.25 area, the 100-week average. If prices break back, supports back here at the 28.37, the 18-week average of closes. In the corn market, you have a mixed story. You've got the pattern of lower highs, lower lows. That's why I have the two arrows pointing down. The momentum is still pointing basically upward. The bias is up because the market's over the 18-week average, but that swing line is down. I'm calling it this a market that's fighting with itself here. We're going to start hearing more and more better numbers now on farmer intentions. We're hearing them all week, and we know that there's been a movement away from soybeans into corn. The question is how many millions of acres, and that's what we'll all be looking for. In the wheat market, Russia has been having problems in their shipping out of wheat out of that area of the Baltics. And what's going on there is big demand, obviously pricing and everything through Europe. You've got higher lows, higher highs. You're into a resistance area. Momentum, not down, certainly not up either. We're at a zone where you're fighting. But you've gone sideways a long time. This could be a surprise market. If this market starts moving out and pushing on this number to the upside, there's room between where you're at and where you were before in August to get a heck of a move here. The bulls temporarily have the control of that market. In the cocoa market, from the Bollinger Band top, you have fallen back to support at the 18-week average of closes. The 100-week is under that. You've got a bit of divergence. Even though you've got the pattern of higher lows, higher highs, and you're at a support zone, momentum has turned down. So the market's got to fight that for a bit. We'll see what it does. To break the uptrend, you got to take out the low right here on this day. That day's low was 21.75, so you've got to get through a lot of support in order to get there. I say the bulls are probably going to try to make a stand. The sugar market just stalled out against the 18-week moving average of closes. Didn't have the power to get up to the 100-week yet, and momentum is pointing down. I'm going to call this trendless. Lower low, higher high. Really not doing a lot there. In the coffee market, I see the resistance at the 18-week average of closes, 107.75. The swing line is up. Momentum is up. Can the market finally mount something and do something with it? This has been a problem area. We'll see if that continues. Last in the cotton market, actually I've got a couple more, so I shouldn't have said last. Lower highs, lower lows. Bearish. Take out 74.60, and what happens is you'll turn the market into higher lows, higher highs, but that still leaves you with two layers of resistance. The 18-week average, 76.21 to 78.05, the 100-week average. Right now, bears are controlling the market. Cattle market still looking bullish, just running against that upper Bollinger Band, momentum locked in, still a very bullish looking chart. In the hog market, it's falling on its own weight. It's back into a bear trend. Lower highs, lower lows, a close under the 18-week average, and momentum trying to turn down. This could be a candidate to get down into the 5100 area. Resistance back here at 59.70, the 18-week average, and you'd have to take out 64.22 to negate this downtrend. You put it all together, it's an interesting time. And what I like to do is start you off each morning with how I think the market should go. Let me tell you about my history. I've done this 50 years. You think when I began I wasn't buying advisory services and that I still don't get them? You'd be very, very wrong. You learn to pick the ones you like. But like anyone else, I look over my shoulder. Guys, what do you think of this? How do you do that? I start off every morning at 8:30 a.m. and believe me, I got a cup of coffee there, and I'm talking to you. My charts look just like this. In this exact sequence, I record the 40 charts and what I'm seeing, and believe me, You get a lot of information. Let's assume you just want grains. You can take the bottom video, swipe to it. But I'm going to tell you the chart action, what I'm seeing at least, what I think the pros are doing, the technicals and fundamentals, anything at that time. And I pick 8:30 to start recording because most of the government reports are out. There's a few more that can come out at 9 or 10, but most are out. And they've opened up the pit trading markets and most of the options on futures. Everything's now going, including the VIX. It's a perfect time to start talking. And I'll throw out very specific trade ideas to you, both day trade, position ideas. It'll get you moving. So what's my goal? It'd be like you sitting next to me. Throw out what my ideas are. You take it from there. Do I charge for it? Yeah. You start off at about 38 cents a day, $7.95 for the first 30 days. After that, if you want to stay month to month, it's $15, and we're even going to offer a yearly subscription that I've got to figure out the price, but it'll be something in between the $7.95 and $15 area. So how do you try this out? And come on, $7.95? If you like these videos on the weekend, why don't you really see what I do? Give a call or go to our website. Under the word education or research, you'll see, just click it, drop-down menu will come. You're going to see very clearly it says morning subscriber video. Click it, sign yourself up. I'll have you all ready to go come Monday. You have a great weekend. I'm Ira Epstein.